you the ag information you need. This is Market Talk, produced by the American Ag Radio Network. Now, here's your host, Jesse Allen.
And welcome into Market Talk for this Thursday, December 16th. Great to have you with us once again. I'm your host, Jesse Allen, and thanks once again for joining us. Find us online, markettalkag.com, markettalkag.com. Find all of our social media links, our streaming sources there, and everything. You can find it all, markettalkag.com. Well, today we have a conversation with Kent Beadle from CHS Hedging, looking at our markets. Unfortunately, part of our interview, the beginning part of my interview with Kent, talking about the Federal Reserve statement and the wheat markets on the day, we had some technical issues and lost part of that interview as I sat down with Kent a little bit earlier this afternoon. So unfortunately, we don't have that portion of our interview. We did see the wheat markets rebound today up double digits due to a lot of the talk about and a lot of the pictures about some of the wind damage across parts of the high plains. We also saw on the Fed side pretty positive tone to the market trade thanks to the Fed comments for December from their monetary policy meeting, their two-day meeting that wrapped up on Wednesday. And we saw a little bit lower U.S. dollars, so we saw that support to commodities in general as well here on the day on Thursday. We pick up our conversation with Kent Beadle from CHS Hedging, though, talking about the soybean market and how the market's still trying to wrap its head around renewable diesel. We saw good strength in bean oil today. I posed the question of whether oil is taking back over from meal being the leader of the soy market, and if this is a longer-term trend he sees. And he's talking about how the market, again, trying to wrap its head around renewable diesel and the demand that we'll see for soybeans thanks to some of this new renewable diesel, biodiesel, etc. Here's our conversation picked up in progress with Kent Beadle.
I think that many in the trade were believing that all of the chatter about increased biodiesel production was tying back to actions that might be taken by the USDA and the EPA in the various mandates that we were going to have on a federal level. But it's really being driven by state mandates, on the West Coast. And it's being driven by, of all things, the airline industry, which is trying to push and who are being pushed by the environmentalists to become more green. And as we hear reports that we may need millions and millions more acres of soybeans to satisfy the soy oil demand that is going to be required to meet some of these mandates as we move through 2023 and 2024. It's hard to see where we need to have soybean prices cheaper. We're right now doing our very, very best to incent soybean crush in order to provide that oil. And some of this mandated usage is already kicked in and is already in effect. And so that's been the driver and the story of soybeans. And quite frankly, it's a reason why you have an awful lot of bearish soybean analysts scratching their head wondering why soybeans aren't going down. Because they want to look at our ending stocks, which look to be adequate, and the South American production, which may have some struggles in the south, but looks to be very solid in the north. And it just feels like we're going to have enough beans, and we should probably be a little bit cheaper, but it's not happening. And the driver for that are the board crush margins, which continue to be extraordinarily solid. We've got, front month board crush at $1.43 a bushel. And essentially, we have no month all the way out the curve that's any less than $1.25 a bushel. Those are extraordinarily good margins for the crushing industry. And of course, it's giving a kick to the crush industry to not just crush as many soybeans as they possibly can, but to start building new soybean crushing facilities. And of course, that's going on. We have at least 7 of them that are, in some form of on the drawing board or in construction, and we may get more, considering how much potential demand between aerospace and then the trucking industry on renewable diesel that we may actually need.
Well, Kent, looking over at the corn market as well, we know the story surrounding high fertilizer prices. We know how much that's weighing on the corn market, but I want to focus with you on, and I want to get your opinion on this resistance overhead at $6 in corn. It just seems like we cannot seem to break through it. We're waiting and waiting and waiting, and we keep testing it, but we don't break through it. What are your thoughts with this corn market? And do you think if soybeans can continue to go higher with bean oil, can that be what finally gets us through that glass ceiling and gets us above $6 at front month corn?
Well, let's start with why do we keep stopping here? Okay. In my opinion, the American farmer is reasonably aggressive right now in selling corn, in moving corn off the farm. You might not hear that from every analyst, but I believe it's true. And I believe that based on the experiences that I have with my client base and that my associates are having with their client base. These are really good prices, and more specifically, the basis levels, especially in the Western Corn Belt, have been extraordinarily strong. And the basis levels in the Dakotas and Minnesota are historically strong. Basis levels in the Eastern Corn Belt are good for this time of year. They're not historically good, but they're certainly decent. I was in Illinois yesterday and was essentially looking at bids to some of the clients I was visiting at plus 5 or 10 up to maybe plus 20 over the board. So we have really good basis levels, and we have reasonably high futures prices, and farmers have been taking advantage of it. And if you price basis and then you start looking at your objective of where am I going to attach the futures to those basis sales I'm making, the obvious thing is, well, $6, but a lot of people have kind of trained themselves, put the offers in at a little bit underneath the big round number in order to try to get filled. And so I think you just have a lot of resistance from, either farmer flat price selling or farmer pricing of basis contracts that are keeping a lid on the market at this point in time. I think we're going to get through it. I mean, there's an old adage, double tops hold, triple tops don't hold. And, we've really been up there now, beating on this door about 4 times. And, my strong suspicion is we are going to get through it, whether it's this week or next week or sometime in January. I think we'll likely get March corn through that resistance.
Well, Kent, as well, you mentioned South America a little bit, and I'd like your thoughts there. We're starting to hear about more dryness down there. We're still looking at a pretty sizable crop, this first crop coming out of Brazil and Argentina, but with the dryness, there's starting to be some early concerns about that second corn crop, that Safrinha corn crop in Brazil. And would that, if they end up having more dryness concerns there, I feel like that would also be a bullish catalyst in our corn market as well as we get into the month of January and February. What are your thoughts about that?
Yeah, so you've got kind of two components there. Number one, when are they going to be able to get the safrinha crop planted? And, they had a historically poor yield last year because you had two things going against them. You had the fact that they were dealing with, hotter, drier conditions because of La Nina. And they were also dealing with the fact that the crop got planted very late because of the lateness in the planting of the soybean crop. So this year, you don't have that second one. You don't have the concern about how early are we going to be able to get the safrinha crop planted. It should be able to get into the ground quicker and more timely, and therefore maybe miss some of the worst of the weather. However, as you say, the forecasts, especially for the southern part of Brazil and for Argentina, have been turning drier and warmer, and it's a concern. So, if by chance the total Brazilian corn production ends up, being impacted by this warmer, drier weather, and if by chance it's warmer and drier as the safrinha crop starts to get planted, then goodness, we definitely have another bullish input here for the corn market.
Kent, I'd love to get your thoughts on livestock as well before we run out of time. Cattle at hogs today. We had better export sales for the week in both pork and beef. I'm sure that helped out, no doubt. Hog market looked a little stronger on the board compared to cattle. And, feedlot country and cattle is starting to see the price levels come down a little bit as we get into the holiday drag, so to speak. What's your thoughts with livestock and the tone of this market as we look to wrap up this week?
Well, first of all, pork demand does seem to be very strong. It feels as though we're shifting back a larger percentage of the export program into Mexico and away from China, which, makes sense as they eventually have seen their domestic pork production rebound. I think we feel fairly fortunate that we're getting, some replacement of that lost export to China with a higher amount of exports into Mexico. So that part's been solid. I think that your domestic demand for protein generally has also been very, very strong. I mean, the American consumer has a lot of has a lot of spare cash around right now. I mean, we've been stimulus checks and work from home has kept energy expenditures down somewhat. It's just been the American consumer is flush with money, and that usually finds its way into higher meat demand, and I think we're seeing that. And of course, we've obviously had some rebound in restaurant traffic here over the summer, and I think that continues. It becomes a bit of a concern if Omicron variant and or Delta, the increases in the Delta variant, if that somehow keeps people from going to the restaurant. But I don't think we're seeing that play out right now. In fact, I almost feel like it's opposite. The mask mandates that you have in public places in a lot of areas sort of get pushed aside at the moment that you sit down to a table at a restaurant, and it almost you get the sense that maybe people feel good about going to the restaurant because they know that when they're eating, they're going to get a chance to take their mask off. So, and yet we still have, I think, a lot of home preparation freezer demand that developed over the course of COVID initially, and I don't think people have necessarily forgotten how to cook over the last year. So we I think we see a lot more people wanting to have a stockpile of protein in their freezer at home, and that all adds up to some pretty solid underlying domestic demand, in both the pork market and the beef market.
Well, Kent, great stuff as always. Any final thoughts? We talked about the Fed, and again, seems like a pretty positive tone in the markets after that Fed announcement, and looking at everything on the broad scale here as we head into Christmas, it just seems like a more positive tone in the markets. Any final thoughts you'd want to reiterate or share with our listeners here today?
Well, certainly we view the market always and every day as, the where and when are the opportunities to market grain. And, I just kind of remind people basis levels are historically good. Cash prices are reasonably high. While futures are underneath the highs from last year, they're still pretty strong. Don't forget to take advantage of the opportunities both here and for new crop, especially when it comes to, locking down margins for next year. Make sure that you're in touch with someone that can help you manage your risk, and then, start to execute, the locking down of the margins that you're being given for next year.
Well, Kent, you and the team there at CHS Hedging can help folks manage their risk and help them out with their marketing plan. What's the easiest way to reach you and the team there if folks need a little advice?
Yeah, sure. We can be reached at 800-328-6530. If you want to get a little more information about us and CHS Hedging, www.chshedging.com, where you can get a lot of information about CHS hedging in general, as well as get our daily commentaries and our outlook on the marketplace.
Kent, I appreciate the time as always. I wish you and your family a Merry Christmas, sir, and we will talk again real soon. Thanks so much.
Jesse, Merry Christmas to you and yours. Thank you very much as well. Appreciate it.
And again, that's our conversation for today's show with Kent Beadle from CHS Hedging. And unfortunately, we lost the beginning portion of our conversation as I sat down with him earlier this afternoon. Sometimes technology just doesn't want to be my friend, but a lot of great information from Kent there we still were able to salvage for today's show. And hopefully you learned something valuable. Always learn a lot of things when I talk to Kent Beadle from CHS Hedging. That's going to do it for the show today. Coming up tomorrow, Ted Seifert, Zaner Ag Hedge, will be our guest as we wrap up this week's trade and look ahead to the markets next week as we head into the Christmas holiday. It's been Market Talk for this Thursday, December 16th. I'm your host, Jesse Allen, wishing you a great rest of your day.